Okay, so an appraisal. How does this work? Let's go over the details. So an appraisal is done on a property to determine the value of the property at that time. And the way that it used to be done is you could call up an appraiser and say, hey Joe, go out and appraise this property. Well, that was before the financial crisis in 2008. Now, the way it's done now is that you call up or you send in a request to an appraisal management company or AMC. Well, you don't even know who the appraiser is that's going to be going out to the property. The appraisal management company randomly selects an appraiser that's in that area. They send them out to the property to determine the value. The way that the appraiser is going to come up with the value of the property is basically looking at comparable sales, for the most part, for most appraisals, of similar properties. So let's give an example. Let's say your property is a 2,000 square foot home and it has a 5,000 square foot lot, the one that you're purchasing. Well, let's say they're looking at another home that just sold recently, and it was 1,800 square foot home, and it had still that same 5,000 square foot lot. Well, they're gonna look at it and they say, okay, well this one has 2,000 square feet, this one has 1,800 square feet, so it's 200 square feet less on this other one that we're comparing it to. So they're gonna add some value to the home that you're purchasing and say, hey, it's worth a little more because it has more square footage. Or maybe yours has a 2-car garage and the other one had a 3-car garage. They may take away a little bit of value from the one that you're purchasing. And that's kind of the way it's done. Basically, once you get that appraisal back, you can take a look at it and see if it meets your qualifications as far as what you're looking for, as far as making sure that you're purchasing at the level that you should be. An appraisal is really done for lending purposes only. Now, if you were buying a property all cash, you don't need to get an appraisal at all. But most people are getting a loan on a property, and therefore the lender is going to require that there's an appraisal done because they want to make sure what they're lending is based upon what the value of that property is. And let's get into that for a second. So what if your appraisal comes in lower than what you're purchasing for? Well, there's a lot of options. One, for the most part, a lot of contracts you can potentially just get out of the contract if you don't want to do it. Now, you've got to talk to your realtor about these things because each contract can be very different. But let's say you want to move forward, and let's say you were purchasing at $300,000 and you were putting down 10% on this loan. And let's just say you had to put down 10%, even though you don't necessarily need to put down 10% on loans for the most part. But let's just say you did on this loan. Okay. So it's a $300,000 purchase, you're putting down $30,000 because that's 10% of 300. Well, if the appraised value came in lower, let's say it came in at $280,000. Well, you'd either negotiate with the seller and you'd say, hey, I only want to buy it for that $280,000. But maybe you say, okay, the seller says, I only am going to sell it at $300,000. I don't really care what the appraised value came in at. Well, then maybe you want to do that. So you want to move forward at that $300,000 purchase price. Well, 10% of 280 is $28,000. So you'd have to put down that $28,000 on the 280 appraised value. But if the seller still wants the $300,000, the difference there is $20,000. So that would mean that you're going to put down the $28,000 to get your 10% down on your loan, but you're also going to have to pay the seller that extra $20,000. So really it's a total of $48,000 that you're putting down on this. So because the lender is only going to lend based upon an appraised value. They're not going to lend on the purchase price if the appraised value came in lower. So I hope that helps.